Hello everyone, welcome to this new series Charting Patterns. In this series we are going to explore different types of patterns that occur on a daily basis, and these patterns are extremely important for any improving traders. And the first pattern that we are going to explore in this series is head and shoulders pattern. Of course, the adjacent uh, closely related pattern is inverse head and shoulders pattern. We are also going to look at these both patterns in this video. So what is an head and shoulder pattern? Just like our body, we have a head and two shoulders, right? Similarly, there is a chart pattern where you find shoulders, something like this, and then there is a head and there is a shoulder. And there is a neckline that connects everything, right? Just like our two shoulders and the head is always higher than the shoulders. So pretty simple, isn't it? Similarly, we have an inverse head and shoulder where it looks like a V and elongated V and then another V, and then you connect these lines together. So this is head and shoulder pattern and this is inverse head and shoulder pattern. We are going to explore all the conditions and how you should draw this, what are the things to keep in mind while drawing, and also how to use this and then target the price movements. So this is one of the reversal indicator patterns, meaning that the market has peaked out or it has reached the bottom and it's going to reverse. This is one of the patterns that confirms signs of reversals. So head and shoulder pattern is a great indicator for reversals. And let's also try to understand how to draw the neckline, how to draw the targets, and what are the things that can happen in reality, right? There are a few things, yeah, on paper this is like very much obvious, but then in reality it need not be looking like this. Sometimes what happens is you may have certain tilt and then certain tilt and then certain tilt like this, and then the baseline can be like this, right? Or maybe sometimes like this and then like this and then like this, and then the baseline can be slanting. So it need not be perfect horizontal straight neckline. Sometimes the angles can be tilted upwards, downwards. All possible things are open. So we have to keep that in mind before we step into drawing this particular pattern. All right, let's explore the first example, which is Wipro. And in this example, we are going to see how it looks in reality. As you see, the neckline is slightly tilted. It starts off with a base. Let's zoom in and check it out. It starts off with this base, reaching to the peak of it, reaching to the base of it. Then there is a head reaching to the peak of it. Then it reaches the low. And then we reach to the next peak and then here. And as it breaks the neckline, this particular pattern is activated. The head and shoulder pattern is activated only when you see a breakout on the right side. This should break down. Only then the pattern is confirmed. You can have all of this, but if this breakout is not happening, then the pattern is not yet confirmed, right? Once this breakout has happened, then what should be the potential targets, right? It's pretty simple. You have to consider, theoretically, you have to consider from the head peak of it to the baseline, that is the neckline, you measure the price, right? And then just duplicate that, extend it to this particular corner here. That becomes the downside target. So this becomes the downside target. But in reality, can we expect every time for the price to reach here? Absolutely not. The reality could be slightly different. The reality, maybe it comes down till 80% level and then it can retrace, or probably it can reach here and then continue to further go down. As you see in this case, it's going down, right? It has gone down even further. But Principally, what you can expect is this length is what should be the ideal target, right? And sometimes you may have to cut it short. Maybe you want to exit here, that's well and good. So what I personally do is I come up with two levels of target. One, the shoulder length I measure and use that as first target. And once that's achieved, then I use the head length as my second target. So that's how, you stand a chance to maximize, at least, some profits can be booked if in case the market reverses from, midway. You shouldn't be in, having not booked any profit at all. To avoid that situation, I suggest that you can measure the shoulder length and then keep that as one target. And the second target could be the actual target that you can expect from this breakout, right? However, it is not as simple as it looks. There are certain conditions of how you do it, how you draw it. So let's zoom in and see. You see, we are including the wick. So these are the conditions I've written down here. You should include wick to wick, right? When you're drawing, you should include the wick, not just the body alone. You cannot just start off with the body. You can go and include the wick, right? So wick to wick you can consider. Second thing is that the shoulder should be smaller than the head. Never that it can happen that the left shoulder is like this and then head is like this. The third one is, equal to this length or above that. No, that's not a head and shoulder pattern. An head and shoulder pattern clearly will look like this, distinctively the head will be much bigger than the shoulders. That's condition number one, right? You need to keep this first condition in mind very clearly. Unless you see that, the shoulders are smaller than the head, this is not an head and shoulder pattern at all, right? So what we see here is a very good classical example of head and shoulder patterns, right? Let's explore the second condition. Shoulders need not be even in height, right? So sometimes it happens that, here it's almost like a textbook example. Both the shoulders are symmetrical of almost same height, right? But sometimes the shoulders can be, this may be only like here, and the second one could be like till here, right? Still that is an head and shoulder. The shoulders need not be even in height, right? That's something you should keep in mind. Then the third one is you should measure from head peak to the baseline, the neckline. The targets is always measured from the head to the baseline. However, I gave you a second option in case you want to, not miss out any opportunities and there is some uncertainty in the market, you want to really book something, then you may want to consider shoulder length. But as per the theory, you should only consider it to the neckline as target. Okay, keep that in mind. Then, like I said, the targets in reality could be shorter or longer than the projected length. Okay, you should be having an open mind when it comes to the targets. Sometimes you may have a good luck that the target is achieved and the market is falling faster. And what you need to do, you need to keep trailing your profits and then let it go as far as it can go, and then you can maximize your profits. But there is a bad habit with this, right? Every time you cannot expect the market to give the profits in full, right? Sometimes the market need not have to fall all this length. Maybe it will find a reversal and then it will go up, and quite often than not it will always return. So you have to be very flexible in keeping your targets realistic and practical based on the index or equity or any other market that you play in. You should know the potential and the volatility of that market and then decide where you want to exit. Okay, then this is optional. I use this shoulder length as intermediate targets. I use that, right? If I have 100 quantities, probably at shoulder length I can dispose some 50 and then hold on the other 50 quantities for the actual target. That's principally you can keep that as a trade discipline. That's something I practice, right? And then patterns can be slightly different from what theoretically it should look like, right? So here you are seeing a very classic examples. In the coming examples I'll show you how this pattern need not be so perfect, V shape or M shape. right? It will have a distinct, tilt towards the left or to the right. You will see all such examples coming up next. So that's there. Then after the pattern confirmation, the market should not exceed the shoulder's height or to realize the targets. This is something to keep in mind. See, you need to see that the target lengths, sometimes it breaks down and then it need not have to go down immediately. Suppose it has given a breakdown here, it need not have to go down on the very next candle. It can consolidate and then trade here for some more time and then finally break out much longer. Okay, so you might be wondering, that case, how can I really rely upon this uh, pattern, right? So there is one rule of thumb. So yes, the breakout happened. The very next candle, let's say it has become green, and then it is trading here. So does it mean this pattern is broken? Not yet. I will say the pattern has failed and it didn't work only when the market has come to the shoulders height, right? If there is a large green candle reaching out here, then I would say that this pattern has failed, right? You can ignore this pattern in that case. As long as there is some sort of consolidation happening, maybe some sessions later, you will find the actual breakout that it is supposed to give you, right? So that's what an head and shoulder pattern and its conditions are. So let's have a quick look at it. So you should include it from wick to wick. Shoulder should be smaller than the head. Shoulders need not be even in height. Measure from the head to the neckline. Targets in reality can be shorter or longer. And I use something called the intermediate targets, which is not the theory, but then it's my own principle and discipline, which you may want to try it out. Then patterns in reality can be slightly different from what theory suggests, and sometimes the pattern gives the confirmation, but then it need not have to give the breakout on the very next candle. It can continue to consolidate before the actual breakout happens. So these are the things that you should keep in mind in head and shoulder patterns. The same conditions works perfectly fine with inverse head and shoulder, except that the shoulders are flipped inverse. That's it. We are other than that, everything remains the same. So we are going to see a couple of examples of how it works in reality to give you a better picture of what you can expect in a live trading market, right? So let's start off with the next example. I will bring in the next example. One moment. So the next example here is Tata Motors. Okay, Tata Motors. Here again, you see there is a nice head and shoulder pattern, right? And the breakout has happened here, right? And the length of it is here about 10 points. And did it reach? Yes, it reached here. In fact, it went on to break that and then go double its target's length. But you need not have to wait for this. The most reasonable expectation is the actual length from it to the baseline. That is the actual target, right? And you see here the shoulders and the head is slightly tilted to the left, right? This is some small deviation that you are able to see. And remember, this tool, you can find it here in patterns on TradingView. There is head and shoulders, right? So supposedly this is the left shoulder you want to draw, and then right shoulder, left shoulder, and then there is a head that you drew, and then this, and then if it is getting over here, this is not the completion of head and shoulder pattern, right? The head and shoulder pattern should invariably connect with the baseline, and then it should make these sort of green zones or whatever color that is preset. It should complete that zones. Only then the pattern is actually happening. Otherwise, if you find no, it's not connecting to the baseline, the necklines are not connected, at least, from this left shoulder to the right shoulder, there should be some sort of, direct connection, right? Only then you can say this as head and shoulder pattern. At least some 2 points of connection from left shoulder to right shoulder should be there. See here, 1, 2, 3, 4 is very ideal. 3 is excellent. 2 at least should be there, right? Only then it makes the pattern complete. Otherwise, it's not an head and shoulder pattern. So you have this second example. The third one is my most favorite, Bank Nifty. So I'm going to show you an example from Bank Nifty now. Here we go. I think, did it go? Yeah, here we go. So this is one good example. Here you see the left shoulder is smaller, the right shoulder is much bigger, and the head is the biggest of all. And this is a perfect head and shoulder pattern. And sometimes the shoulders are shorter in duration, and look at the head, it's much larger time frame, like so long, right? So these are the reality. Now in reality, you can have the head elongated for very longer period of time, the shoulders having such a shorter range of span. Everything is possible. And the most important thing to note here is, in the previous examples in stocks, there were only like 10 points, 20 points as targets. Now here you see this is 1000 points. Will it happen? 1150 points. Will it happen? Let's check it out. See this, guys. Absolutely, there was a perfect breakout. In fact, it went even further down. But then this is the most realistic target, and you see how well this head and shoulder pattern works time and again. And you will see this happening quite often, uh, almost on a daily basis. If you pay attention to things, you will be able to spot this particular pattern uh, quite easily, right? Not in one particular stock or one particular indexes. It can, if you open, randomly some 5 to 10 stocks, definitely at least 2 or 3 of it will have an head and shoulder pattern. You just need to go through little bit backward data to figure out where this pattern has formed. That's it, right? So you have a good head and shoulder pattern example here. Now, um, we will also explore the inverse head and shoulder pattern. But before we do that, if you still have certain questions, if you have not understood, just pause at this juncture, go back, restart from the beginning, and then understand how the conditions work, how you draw the left shoulder, right shoulder, head, and then measuring the targets and then extrapolating it to the breakout target, and then what are the conditions, what are the realistic things that you can expect. All these things you just get a grasp of things and then proceed further, because it's all the same. Only thing is that the inverse head and shoulder is just the flipped version of it. Rest of the things and the conditions remain the same, right? And I'm going to show you the inverse head and shoulder examples. And the first example that we are going to see is Reliance. I'm going to bring in Reliance now. Where is it? There. Yeah, here we go. Here you see again, see, this is the length of the candle, and I'm not drawing it from the starting point of here. Rather, I'm taking it from the middle of it, because this is where I see the formation happening, the head and shoulder pattern happening. And what's most important is that I find this one much longer than all. So my eyes always want to look for the head first, and then the shoulders will appear on its own. Okay, and then you connect all of it, you get the baseline. And look at the breakout. If you measure the height of it, you very clearly have much higher targets achieved. And this is every other condition remains the same, except that the way that it looks is just the flipped version of head and shoulder, right? And here you see the length of head, it's so broad, and almost this is a textbook example. The shoulders are of even height, right? That's the other example from Reliance, right? The next one in our list is Cummins India. So let's go to that, Cummins India. So this one, yeah, we have a perfect head and shoulder. Sometimes you see that there is a gap, right? There is a gap. Now, how do we read this? Sometimes the gap could be inside. Say that the candle closed here and there is a gap. That will be very well part of the shoulder. And how to read that gap? If it is on the downside, you see that gap as a big red candle. If it is on the upside, you see the gap as a big dark green candle, right? So that's how you should read the gaps on the shoulders. But sometimes there is a gap even before the shoulder. You don't have to worry as long as you are able to spot the head and then the shoulders appearing on its own without making any effort, like how it appeared here. This is a perfect head and shoulder. We are expecting a 48 points breakout, and did it happen? You see, this is the recent example. It is still on the way. Maybe it could reverse from here because it has achieved already 80% of this length, and the shoulder length easily it has achieved. But still, you may expect it to go till for 1649. So that's a huge possibility, right? So this is as of today, as I'm recording this video right now, this data is showing an upside breakout on inverse head and shoulder pattern. So something that you can watch out whether this pattern is going to complete its target or it's going to reverse. You can observe it on Wednesday and see whether it's going to complete or it's going to reverse. This will be a good example for you to look into, right? And the last example that we are going to see in this is Saxoft. Saxoft, right? So where is it? Here we go. Here we go. So here you see the neckline is tilted. The shoulders are way smaller. The head is much bigger. Perfect textbook example. And then it is slanting. Now the breakout is this length, and has it happened? Not at all. You see, this is what I was talking about. One of the conditions is, yes, the pattern is confirmed when the market crossed this neckline above here. The pattern is confirmed, but does it have to give the breakout the very next candle? No. The market is consolidating. This is what you should observe. The market is consolidating, and at any point it has crossed the shoulder's length, right? This is the shoulder length. Has it ever crossed in this? Never, right? So it can consolidate for some sessions, some length of time, and then finally it can give a breakout that takes it to this level, which is 168 levels you can expect pretty soon. So this is all about, a head and shoulder pattern and inverse head and shoulder pattern. Some of the things I might want to really talk about is how to draw this, under which time frame should I draw. So it all depends on what sort of trade setup that you have. If people draw using 1 minute, 3 minutes, 5 minutes, and so on, but the reliability in a smaller time frame is very low. 1 minute is absolutely a no. 3 minutes is not okay. 5 minutes onwards is fine, but the most reliable is at 15 minutes time frame onwards. So if you're seeing an head and shoulder pattern in a 15 minutes time frame or more, that's pretty intense and extremely reliable. Okay, and the larger the time frame, the more reliable it is. Here we have drawn all the examples in 1 hour time frame, meaning this is far more reliable than any shorter time frame, right? And these breakouts, you can draw. You can try drawing 15 minutes. The 15 minutes head and shoulder pattern can be good for intraday or probably BTST trades. That's very good. If the head and shoulder pattern is an hour early thing, or it's in a say 1 day candle, then it's extremely good for short term. Maybe you can think of it for about a week or maybe even a month. You can expect that breakout to happen. So it all depends on what sort of trade setup that you have, what sort of positioning that you try to do, basis which you need to choose a time frame. But principally, if you want to add more reliability to this pattern, you should bare minimum start off with 15 minutes, right? So that's all the conditions and the rules and the basis of how you draw the shoulders, head, and also the baseline, and then measuring the targets, and then the realistic expectations of targets, and how sometimes, even after the breakout, markets can consolidate, and then how important it is to consider the wicks. These are the things that you should keep in mind while drawing head and shoulder patterns. So that concludes the head and shoulder pattern and inverse head and shoulder pattern. And we will meet up in another video with one more charting pattern. Thanks.